The IMF just warning on the negative effects of a trade war again. Just this hour, putting out a report on global debt imbalances. It's titled, Protectionism is not the answer, warning that the U.S. is perpetuating debt imbalances all over the world. Joining us now is the IMF chief economist, Maurice Obstfeld from Washington, first on CNBC. Nice to see you, Maurice. Thanks for joining us. Let's just put this into plain English. It gets kind of wonky when you're talking about global imbalances. Is this a shot against the administration's trade policy?
Well, I would question how you characterize the report. I think our message is that there are global imbalances which have remained pretty much constant over the last few years. And let me explain by what I mean. Those are current account imbalances, which are differences between countries' exports and their imports. And our view is that these are not due to any one country. I mean, these are the result of national policies interacting, and it's up for the entire global community to work together to resolve these. The U.S. has some work to do in this regard, but countries with big surpluses, Germany, Korea, China, also have work to do.
When the president says we are the piggy bank that is being robbed, I mean, I assume he's talking about the fact that the U.S. has the biggest trade deficit, and he considers that a mark of unfair trade, where everybody else is taking advantage of us. Is that true?
We view deficits at the aggregate level as being largely macroeconomic phenomena. So if you have an economy that is saving insufficiently and borrowing abroad, that's going to show up in a trade deficit. I think the point to keep in mind is that countries that trade generally gain from that trade, and you see that in the greater availability and lower prices of goods, and they're mutual gains. It's not a zero-sum game.
Finally, Maurice, a question I've been dying to ask you, and it's related to this. Are the Chinese manipulating their currency weaker right now as a weapon in this trade tit-for-tat with the U.S.?
Well, our report, I have to emphasize, looks at the medium term, and it's retrospective in looking at 2017. But, there have been short-term movements in the RMB. There's no evidence of manipulation, and I think the recent U.S. Treasury report came to the same conclusion about China. They haven't been intervening in their foreign exchange market as far as we can see. But if you look at the combination of lower growth indicators for the last couple of months, the fact that the People's Bank is easing a little bit, and the threats of tariffs against China, all of those push in the direction of a lower exchange rate.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.